Good morning, guys. Morning, yeah. This is 12:31 a.m. Nigerian time, and my name is Aart, and welcome to this episode of this video. So it's been long I made video for you guys, so I just thought of showing you guys what happened today, especially on Euro USD and how it is very important based on timing and candlestick formation. So I'm going to go down to Euro USD on the daily time frame. So I'll go down to the daily time frame, and then I am going to cut out today's candlestick on the daily time frame. So now, as you guys all know that we are bullish, we are very much bullish on Euro USD, and then I am bullish too as well. But you guys remember that I used to talk about when we have a bullish day. In a bullish day, when you're expecting a bullish price action, the first thing is we always want what? In a bullish day, when we're expecting a bullish price action, we always want London to sell. Then the sell that London is going to sell, the sell should take out the previous day low. I think I've sent it to the channel before. You can go back and check it. The previous day low, it is going to be in form of a sell side liquidity. I am explaining based on the way I trade, right? Now, the previous day low is going to be in form of a sell side liquidity, right? And then we are expecting London to first sell, to take out this. Then by New York, we start looking for buy. So London sell, New York buy. And in a bearish day, same thing. In a bearish day, we want London to buy, the New York sell. Why are we expecting London to buy? It is just a simple logic. Since we are expecting a bullish day, and we want London to first sell in a bullish day, the sell is to create low of the day. This is it. If we have a price action and London sell, if London sell like this, London will create the low of the day, then New York will continue the buy to the upside. So that is why you will see candlestick giving lows. That every candlestick has a low, we have low. Why are all these low created? Is either maybe Asian sold or London sold before we started having New York buy, right? This is the best type of price action I like to see. So since I'm bullish on EU, right, I have this previous day low marked out, which I want price to first, manipulate before I started buying. Now, on the daily time frame, for those that have been following me for some time, I did usually mention about the doji candlestick. The doji candlestick has the volume at where? In the body. In the body is the volume of the doji candlestick. This is it. This buy here that happened on Wednesday, right? This buy here, I was this morning. I was expecting pullback from the body of this doji candlestick. You can see that this is the supply, right? This was a supply here. This is a supply here, but you can see the bullish close of this supply. This is show that is indicating that this supply will fail. So I was expecting price to come into the body of this doji candlestick. This is a swing structure. This swing structure you are seeing here, it is like manipulation, and it is like accumulation, manipulation, and distribution. That was what happened here. We have accumulation, we have manipulation, and we have distribution. Of course, there's going to be what? There's going to be an order block that led to the distribution. Before the distribution happened, there's going to be an order block inside of them that led to the distribution. So it was very easy what I was expecting sell from that zone, right? I was expecting reversal, right? Even though I was still bullish, but I was putting that sell to as well into consideration. So this is the doji candlestick, which since this supply has refused to hold, this one has refused to hold, at least price should come into this, then take out this high as well as an inducement into the body of this candlestick before we sell. So now the sell, where am I taking the sell to? Into this previous day low, but this I'm expecting the sell to happen when? London. Remember, London. So now let's just go straight to the point. I don't need to start going to, let's just go to 15-minute time frame straight off. So now So this is the body of the doji candlestick. We mark out. Remember, I marked out this as well, which price can eventually still come back. So possibly, if price sell from here, price might react from the body of this doji without taking out this previous day low, meaning that this previous day low is now what? Is now a strong low. And you remember what I used to tell you guys about swing structure. For those that know, this is a swing structure, a low to the right, middle low, and a low to the left, right? So let's go down to 15-minute time frame. There on the 15-minute time frame, this is the buy I took yesterday. I took the buy from here. So this is like the last order block that led to this bullish move to the upside. So now that is all. You remember, this is the doji candlestick supply we're expecting reversal from, and this is the inducement. So I'm going to activate my Asian range now, and let's play the Asian session and see what happened during the Asian session. Now, Asian session has ended, right? Asian session has ended. Now, I want you guys to observe how timing is very crucial, and the time your area of interest is being printed is very, very important. I'm sorry about that. You see this low that swept liquidity. We have a sweep of liquidity there. Let me remove this. So we have a sweep of liquidity there, right? And we have a breakout structure. This is what everybody is seeing. I didn't take this buy, right? This is like obvious buy. Everybody wants to buy from here because, oh, we have sweep of liquidity. We have a breakout structure. But I've always repeat this to you guys that, you see, in this kind of scenario, this kind of thing fail a lot of time. I can't be buying from here. I can't buy from here. Why? Because this low you are seeing here, first thing, I'm going to give you reasons. Now, this order block is printed when 7 a.m. London open. It is very important because if we are going to continue the buy to the upside, this is like a valid zone for me to take the buy, right? Because aside that, this low is printed 7 a.m. London, so I was expecting at least to continue the buy to the upside. Now, in this kind of scenario, when we have a situation like this, we have a stop hunt, we have a breakout structure, inducement. I've told you guys that in this kind of case, taking this kind of entry, it is not good. Why? Because price will first tend to manipulate this low first before we continue the buy. That is, if we are going to buy, before we continue the buy, right? Because there are a lot of people buying there. It is too clean. It is too clean. Aside that, this low, it is what internal, this is internal range liquidity. For those that have been following me, you remember the framework I used to talk about? The framework, when we have framework like this is our internal range liquidity. We are expecting this low to be taken before we continue to the upside, right? That is what internal range liquidity. And you guys remember that if we have a framework like this, once the internal range liquidity is taken, it confirms our valid high. If there is no internal range liquidity taken, we don't have a high yet. Those are the rules I put in place for myself based on the way I trade, right? Now, this low, order block 7 a.m., people are buying from here. But remember, we still have what? Even though this was the last breakout structure we have, like I used to tell you guys that, okay, there could definitely be something from here for price to react from, right? There's definitely something from here that price can definitely react from. But as you can see, price has not gotten there. Price is just reacting from here. It is to create what? Pullback. It is to create pullback. This will not be the only pullback we have, right? Of course, you are going to expect a break. So it was just to confirm and validate our framework, right? So that is why that low is not valid to take a buy from there. Now, when it now comes to time and price, you remember I was saying that I will expect London to what? London to sell. We want London to sell first before New York buy, since we are bullish. But you can see what happened through our London session. London was actually inside of this zone. Now, watching price action, when you are studying, that is why it's good to study. When you are studying price action, there are things you need to consider. There are things you need to put in place. One is your timing. Two, how does price tend to react at a certain time? That time is very important. I was expecting London to sell first so that I will continue the buy during New York. You can see how price tap into the doji candlestick. right, into the doji candlestick or the daily time frame, you can see how price tap into that. Now, people are buying from here. Now, I want you to check what happened throughout London. Throughout London, what is London doing? London was buying. We are expecting London to sell, but instead of that, London was buying. All of this price action happened during London session, right? London was buying. And since London has bought, what will definitely happen during New York? Expect reversal. Expect reversal. Aside from that, we are inside of what? Inside of the daily time frame doji candlestick. So this high was printed 12 p.m. Exactly by 12 p.m. that high was printed. And whenever New York want to come in place, whenever New York session want to start, I want you to start observing what usually happen between 1 p.m. to 1:30 p.m. New York Q zone. There is going to be manipulation between those period of time. There's definitely going to be manipulation between those period of time. See, after that high was printed 12 p.m., what do we have? Remember, we are inside of the daily time frame doji body. This is the whole body of the doji candlestick. It's from there price started. See how this eye is printed. Swing structure. A low to the left, a middle low, and a low to the high. This swing, this is what we have: manipulation and accumulation, manipulation and distribution. We have accumulation, manipulation, and what? Distribution. That is why you now see a high to the left, a middle high, and a high to the right. This is a swing. I don't know, ICT code. I'll try to look for the ICT name. It's from ICT Atlantis. I'm not going to like start. It's from ICT Atlantis. I think it's Three Brothers something. I'll try to look for the name and tell you guys, but I just call it a swing structure. I don't like giving names. That's one thing about me. I don't like coming and be confusing people. So price mitigated this, and we have this sell to the downside. And then what do we have? Internal breakout structure. Now remember that this is a demand, right? This is a demand that many people are looking to sell from. Now let's now go to higher time frame. This candlestick that swept liquidity. This is the candlestick that swept liquidity. This was the candlestick. Let's go down to 15-minute time frame. This is the candlestick that swept liquidity. This candlestick. I've said it before. This is called IFC. Institutional funded candle. There are little differences between IFC and order block, right? Order block would be a whole block. I'm going to show you guys an example of order block, right? This is institutional funded candle. Aside that, on the 15-minute time frame, this is what? A doji candlestick, which indicate that the volume is in the body. Now, I want you guys to now put timing into consideration why it was obvious that we want to sell, even though the entire price action is bullish. After we started selling to the downside, what time are we expecting manipulation to happen? Between 1 p.m. to 1:30 p.m. That is when I used to trade New York session. Now, I want you to watch the time this happened. This high was printed 1:30 p.m. The high was printed 1:30 p.m. It was printed 1:30 p.m. Let's go down to lower time frame. Right? What do we have? This is it. We have, so price came into the institutional funded candle, this IFC, the swing structure. This is their leader, like this is the main candlestick that swept the liquidity. So I want you guys to look at something. So we have what? We have a sell, we have a little pullback, and we have a sell. So price bought up. Take out this, fill the fair value gap, mitigated the institutional funded candle. So tell me, are you expecting this to still be respected? I mean, put in timing into consideration. If this was going to be respected, this zone should be mitigated at that 1:30 instead of the high that is mitigated. Is the low that was supposed to be mitigated. This low, this candlestick here. Immediately this manipulation happened. What happened? Price came into here 140, 142. I won't be taking, there is no reason for price to buy anymore. Instead of that, sell. We are selling to what? To internal range liquidity. So now all of this has, since we have a break of this low, it has now confirmed what? It has confirmed our it has confirmed our swing high now. We now have this high as a valid high because the low has been broken. So we have this low that was broken now. So this high is now what? It's now valid. So since the high is valid, where is your low? Where is the low that led to the high? This was the low that led to the high. Remember, this is the low that led to the high. So we have what? We have this push. We have all of this. We have this push. This is the main pullback. And we have this. So we have this like this. So this is what the internal liquidity. So once the internal liquidity is taken, we have a valid high. And then we have a low. So you are going to use your range from this high to this low. So what are you expecting? We are selling into discount to continue the buy to the upside. Right? That is just the logic behind the sell today. Though I missed out on the sell, right? That is the logic behind the sell. So price came back into what? Into the institutional funded candle, mitigated it 130, and then what happened? This demand that everybody is buying from, it failed. So what do we have? Flip zone. Where are you expecting? Where is the supply that led to the demand to fail? This candlestick that is printed 130, I'm not expecting it to be validated. That is when you should know where to put. Anytime I want to take a trade, and in fact, I usually consider my stop loss before looking for entry. Where will my stop loss be? Where is the place I'm going to put my stop loss that I know that once that place is invalidated, then that setup is not valid? It's not that I will put my stop loss in a zone that once it's invalidated, I will be looking for entry at that same point of interest. It is like wasting money to me. I don't know. That if I know that, okay, this candlestick is the institutional funded candle, I can risk my money. Okay, let me just place my entry in here, right? And then I know that, oh, this high should be protected because this was the high that swept liquidity. Then let me place my stop loss here. Let me cover the ozone. How many pips is this ozone? If you are going to put your this as the institutional funded candle itself, coming. How many pips is the ozone? This was the candlestick. It is sniper entry. The ozone is 11.8 pips. Then I will just cover it. I will just cover the 11.8 pips. Once my risk to reward is what? Is in car. Now, where are we targeting? Let's go to 1 to 15-minute time frame. So we are targeting, we have a range from this high now, and we have a valid, we have a range from this low, and we have a valid high. So where are we targeting? Discounted leg. And not just any place in the discounted leg, the internal range liquidity of the discounted leg. This is the internal range liquidity within the discounted leg. So we are expecting price to sell, right, to the discounted leg, and we continue the buy to the upside, right? And then remember what our confluence, first confluence we had was that this low is the internal range liquidity. So we are selling, we know that this low is not valid. Second thing is that London bought, we are expecting New York to sell. Third thing is that we are coming into the discounted leg to continue the buy. Fourth thing is that we are coming from the doji candle, a supply, the body of the doji candlestick from the daily time frame. You see how I was actually focusing on EJ. I've been focusing on JPYP for some weeks now, and so far, like 2 weeks now, I think I've only taken 2 trades on issue. Like 2 weeks now. Yeah, I think so. So I'll be focusing on, if I pay full attention to this is a very good setup and something that I can just, cover this ozone with about 11 pips and I take the sell, right? So far it's above 1 to 5 hour. I don't mind, right? That is just it. You don't need to start over refining your zone. It will lead to a lot of misentering, and at the end of the day, you start eating stop loss at that same point of interest. You now observe that you are now looking for about 2 to 3 re-entering at that same point of interest. People that use tight stop loss, they won't tell you the secret. I'm telling you that 60% of them are not profitable. They just come online to brag that they are using 3 pip stop loss, 1 to 100 risks to reward. 60% of them, I don't know, I'm talking from experience, are not profitable. They are not. Now, we are coming to the discounted leg, right? We are coming to the discounted leg to continue the buy to the upside. So that was a sell that happened on issue, and you can see how time and price played out. London buy, New York sell. Price is coming from the doji candlestick of the daily time frame. This low is the internal range liquidity, and we're expecting price to sell into the discounted leg on the 4-hour time frame. And then you can see what price did. Right, you can see what price did, and we have the sell to the downside. You can see that currently now we are here. We are in the discounted leg. So anything can happen within the discounted leg, but I'll still prefer price to take this low before we buy on Friday, during London today, right? Today is already Friday. So during London today, so I want you, let's go down to daily time frame. Let me show you guys what I'm talking about from the daily time frame. You can see how price perfectly mitigated the body of the doji candlestick. This was what I had marked out, right? Body of the doji candlestick. Immediately this supply failed. This one here. You see, this place, price reacted for me last week, Friday. But you can see that on Wednesday, it failed. But immediately it failed. This I automatically become the liquidity into this. So if this fail, what happened? We are definitely going for this swing high. So this is just what? This is enough to facilitate sales. In fact, it's enough to facilitate sell possibly into this fair value gap or into this low. And we can have something like this again, right? We can still have the framework we always want to see like this again, right? Then we come into this, then we continue the buy to the upside. So even though we are bullish, that doesn't mean that, oh, as a day trader, if we get into sell opportunity, we can definitely get into them. So that was what happened today on Euro USD. Now on GBP USD, I want to show you guys example of order block. Many people don't. Everything now is just, I don't know, everything is just scatter now. Everybody is just mapping out. Map this out. I'm sorry, that's not. I didn't map that out. Right now, I want to show you an example of order block that happened today. So unfortunate. I think I posted this. This is order block. Let's go down to 5 minutes. It was very clear on my MT4 when I saw it. This is order block. This is an example of order block. This candlestick you are seeing here. You might not know because you might be like, how is this? This is the last sell to buy. This is order block. This is what ICT called order block. The last sell, the last bearish leg before the bullish move. That is order block. It's not something that everybody is now refining to. Some people will now refine order block to one small wick like this. They will not do something like this. They will not do something like this. And then they will not place their entry here. And then put their stop loss here. 2 pips. Something like this. And then price will now come. And then stop them out. And we have this. And then they will not still mark this out again. Same thing, they will still squeeze the whole thing and put it here again. And they want to continue the buy. And then price will just come. Manipulate it a little. Come into something here. Continue the buy. Stop that the second time. And they will still map it. I don't know. Why is it that you can't cover the whole order block at the first place? How many pips is the whole order block? So that is just, this is order block. This was the last sell to buy. This is order block. Right? Price came into it perfectly. Right? This is it. Price came into it, but the timing that price came into it, you can see 8 a.m. 8 a.m. London open. 8 a.m. Between anything, the price action between that 7 a.m. to about 9 a.m. You see that 2 hours and 3 hours and 2 hours time is the time I usually like getting into position, London session. Right? 7 a.m. to 9 a.m. I like getting into position, London session. You can see what price did. Price gave about 100 and something pips from that order block. This is order block. Very neat. I think price came back into it again, but you know, invalidate it. And we have this buy to the upside. This is order block, right? And then that is all. So we have institutional funded candle and we have order block. There are little differences between them. You can go and make research about that. So that is now for now, guys. Thank you very much. And then peace out. God bless you.